So on that note, as we approach, as we do this webinar today, it's really on how to make sound decisions for your business in distress. And from this, it will help us then move it on to the next point, where I have my colleague, Deb de Villiers, who also does workshops that will be a follow-up to this experience today. Christoff will share with us later some possibilities and opportunities. Christoff, take us off.
Yeah, thanks, Thobeka. So I'm just putting up here this poll in terms of what applies to you, sort of. So sorry for that wrong display there, but which descriptions apply to you? Are you an owner of a business? So sometimes we're also a practitioner, which is the second option, A, B, C, or D. So if you're on Facebook, you can just type A, B, C, or D in terms of those options. If you're in the Zoom, you can actually look for the window to participate in the live poll, and I see lots of people are doing so now. You can select more than one option there. If you are a business owner and a practitioner, you can select both A and B, and then also, is your business in distress, C, or no, you're doing okay, D. So for those A, B, C's, and D's, those are for people on Facebook. So just type the A, B, C, or D, or a combination of them. You may be A, B, and C perhaps, or just B and C. And then on Facebook, we'll be monitoring what you're typing there. So Manette is saying she's a B, Tondani is also a B, practitioners supporting small businesses and entrepreneurs in many cases that are struggling nowadays, some of them. And I see on the Zoom voting, it's also happening rapidly. We kind of close to everyone in the room has voted. So maybe we can kind of end the poll there and share the result with you guys. So, oops, I must just get the right window there. That's normally the thing. And I can share the result with you guys. Just keep jumping up there for me. So most of us in the room are, in fact, 72% are practitioners supporting business owners. And I see also many of us on the Facebook feed are saying that we are practitioners supporting them. That's not surprising because of our partnership with SAIPA in offering this webinar here today. And then there are quite a few businesses are doing fairly well still, so that's good to know that even in this difficult situation, people are finding ways of keeping their businesses afloat, but also quite a few under stress, 10% or so on Zoom. And let me look for a number of C's. There aren't many C's on Facebook, but there are some of our businesses as people are supporting entrepreneurs or supporting businesses in whatever practice that may be, in whatever profession that may be, or maybe finding that the fact that our clients are struggling means that we're also starting to struggle because they can't pay us. So we'll be looking at some of those things today, and I'm looking forward to share with you some of the content that we've been able to put together in terms of allowing you access to it here today. But also I'll share a bit later on something about a workshop that we're offering and the way for you to actually get to know a bit more about what it is that we'll introduce quickly today.
Great, thank you. It's great to see a good engagement on this topic. And we have about 2 C's actually in the Facebook feed. On that note, really, I just want to give you a brief on how the idea of hashtag Stay in Business started. And it's really coming from, it was obviously ignited by COVID and the coronavirus, and then the impact of that in our daily lives, and within that, the impact in our businesses, and how we get involved and in our spaces and how we show up. And it's really a space for us to find ways of having conversations, of collaborating, of finding solutions together. And as we know, of course, this group of us are a couple of us, as you can see on the share. It's well, myself, it is my colleague Dev, as well as our colleague, I want to call her Faith now.
Precious.
There's Christoff, there's Precious, as well as Sfiso, and our other colleague Carol, who's actually recovering from a bypass. I hope he's feeling better now already, but hopefully he'll come back soon. And really, we are all really about being here and supporting practitioners and also entrepreneurs. And it's really about the initiative was to help businesses in distress, which was launched by EPI, and to understand that support to business owners are key. And of course, as we can see, if business owners are supported, they are able once again to support their employees and their beneficiaries and their customers and their clients. And also to make decisions. We are at a point where we have to make such hard and difficult decisions. Do we close? Do we stay? How do we pivot? Do we reduce? You know, so it's a lot of decision making. It's a lot of stress. And really, we need to be here to support each other through those options. And some guidance. And this is made up of a couple of us, as you can see, of CESA, GAD, Regan, EPI, TLP Services, as well as Thobeka Enterprise Association. And our biggest partner that has made this possible for us all is, of course, SAIPA. Thank you very much to SAIPA for really finding that it will be worthwhile to partner with us as #StayInBusiness. There are partners to help, sorry, Christoff, because I can talk forever. Christoff has to help me through, and we don't have enough time, those who know me.
Well, I'm sitting with my finger on the button, so.
Thank you, Christoff. On that note, really, I don't want to take too much of the time, and I think it's like we need to go on to the next topic, really. I think we have a poll now, Christoff.
Yeah, so I'm putting up the next poll, and for you that are on Zoom, you'll see there's a window that pops up. For you that are on Facebook, we'll actually share a slide with you, so you can also see the questions. And it's basically about whether you think your business will survive. So even if you are in the support industry, you have a business yourself. So what's the situation in terms of your own business? So, you know, sort of, we won't be sharing this information widely, so you can just kind of click the A, B, C, D, E, or F if you're on Facebook, or you can tick the one on Zoom on the pop-up window. Doing fairly well and making money is A. B, hanging in there but breaking even. C, you have to close if nothing changes in the next 2 months, or D, in the next 6 months, or E, you go beyond the 6 months, but you know, lockdown will have to be removed soon, or F, the business is already closed or is in the process of closing. So just to give us an idea of where people's businesses are that are in the room, so we can focus our discussion in terms of that too. And may I remind you too, while we are voting, that you can put your questions, if you're in Zoom, in the Q&A, just click the Q&A button and you can put a question anytime there. We'll see to what degree we can answer them. Perhaps if we can't answer them straight away in the webinar today, we can follow up later on too. And if you are on Facebook, you can just type your questions or comments there in the comment section of Facebook. So I see Anton and Eurasia and Leanne, they've all been participating there in the Facebook feed. Of course, here in Zoom, the activity is a bit more. But yeah, so let's end the poll then and share the result. So you should be able to see the result there now that we are hanging in there, most of us, about half of us are hanging in there. So that's good to see, you know, sort of considering the situation that the economy is under, that we are able to keep going. There are a good 20% that are still doing very well, you know, fairly well. So that's also very good to see. So in fact, about 70% of us in the room, in terms of our own businesses, are fairly stable, which means that we are in a situation to be supporting others. And then there are 30% that have, well, 15% say none of the above, so I'm not quite sure exactly what that means, which means there are about 15% of us in the webinar, which would be about 20 people that have businesses that are struggling too. So this is perhaps not only in terms of what you can offer your clients, but also what we'll offer you today. You know, sort of, can you take some of this to your clients? Can you actually apply some of this to your own business too? So yeah, Thobeka, so that's kind of like leading us into the thrust of our discussion here today. So I'm not sure if I should just, I know our time is really limited, so, and I would like to spend most of the time. So shall I just jump into what it is that we want to offer? I must just say that we're working closely as a team here. So this is not kind of my material only. It's, in fact, a lot of it was developed by David de Villiers, who's a certified business rescue practitioner, and who's also the person that's the facilitator of the workshop end of the month that I'll tell you about later on. So The first point here is, and this is also, as Thobeka said earlier, about those difficult decisions that needs to be made. And us as practitioners supporting our small business clients, or our business clients in general, not necessarily only small businesses, medium-sized or large businesses even too, in coming up with a way of responding to a really unforeseen situation. No one could predict this. No one could plan for this. There's no planning tool that actually allowed for this kind of radical disruption of business on such a scale. Now, the thing is that we may say the name of this initiative is Stay in Business, but sometimes staying in business means that you need to take hard decisions around the structure through which you work too. And it may in fact imply that you may close businesses. So some of the decision sometimes may lead to you saying this, in the current state of things, this business is not going to go anywhere. And the most wise decision may be in fact to close a business rather than try to keep it afloat and spend all your resources and energy onto trying to keep it afloat while you could have closed it and start something new. But in many instances, perhaps most, it would be about reshaping your current business, refining it, maybe even pivoting into some other product or service. So we'll talk a bit about that decision making in this presentation here today, and I hope it's useful for you. By the way, you can use the comment sections if you have a comment. If you think I'm telling a lie, you can try to call me out. We may have a debate around those things. And I see there's already one question in the Q&A, so I hope there will be quite a few of those questions coming through for us to attend to too. But there are 4 things that we want to focus on, and let's start off and jump into it fairly quickly. So why are businesses getting under distress? Now, this is not new for COVID-19 for businesses to get under distress. In fact, businesses get under distress a lot. And in fact, sort of one can even go so far as to say that some of the businesses that are getting into distress are getting into distress now because they would have in any case, and that the pandemic and the lockdown is in fact was just a kind of a trigger that got those businesses to the position where they are now. But in many instances, if not most, the business model may not be 100% feasible, so in good times, it's kind of, you don't notice it, but in bad times, it really shows. So it may be quite a fundamental design problem in terms of how money is being made in a business. But it could also be other things, sort of, for instance, what happens a lot in the businesses that I work definitely with as a business advisor. I work with people that are technically astute. They perhaps even some of them are the best in the world in the field that they work. But they're really struggling with the financial part. So what the value that they create in the uniqueness that they offer and the creativity that they have, or in the production systems that they put together, is destroyed by the decisions they make around finances. And it's unfortunate that may be the case, or the decisions they make in terms of how they trade. So that's quite often the case. Sort of, I'm not going to focus on all of these things. I mean, the external risk management is one of the things that in most planning tools, you'll know that environment is a key thing that a lot of people are focusing on when they plan. But to what extent can you actually anticipate something like a pandemic like this? So, but perhaps there are lessons for us to learn in the future when we do risk management, that we actually have to look at these things too. So I'm sure we can have anyone in the room, in fact, would be able to say, sort of, here are more things that I can identify that are possibly contributing factors, sort of. So, sort of, I'm just paging through the names here. So I see there's a Christopher too, Christopher from Christoff here, and Chris too, sort of a few of us. So, but yeah, Gerrit, Hester, whoever, whose name I can kind of identify here, Mercia, sort of, I don't know most of you, maybe in the SAIPA community, you guys know each other, Peter, Santana, Rose, Silendile, sort of. So welcome you guys. So we don't want to focus on this too much, but there is more to be said around why businesses are getting into distress. And I just want to offer this quickly for you in terms of the trading cycle, because it's a bit like a bicycle tire. You can see if the tire is inflated, you can go quick and travel well. But if there's leakage in that cycle that you trade in, so you start perhaps, if you're manufacturing with stock, or if your services in combining resources, the right top there in that cycle. And then you merchandise that or organize that in a way that you can sell it, which is at the right bottom. And when you sold it, you collect the money so that you can pay your expenses and then have something left for the shareholders or for yourself. And that's kind of like the typical trading cycle. Now, businesses go into distress because there's leakage, sort of, and leakage is similar to that bicycle wheel, sort of, if the tire goes flat, you go slower, and perhaps even have to stop. So, sort of what happened under the lockdown and with COVID-19 is that this bottom right, the selling and the connection with the customers really got disrupted badly. And well, it stopped for many businesses. As we saw there in the first slide around that pictures in some industries, sort of up to 60% of business just kind of gone. In some cases, you may find cases where it's all 100%, sort of. So it could be customer behavior too that changes. And I think we must be realistic about this, that this business cycle is going to be affected by customer behavior a lot still, sort of, even when lockdown is gone, people are going to act differently. But the reason for us being in distress is because somewhere here there are leakages. And if we can fix those gaps, if we can fill those leakages and resolve them, we'll be able to make the business much more stress resistant. Okay, so that we can actually move quicker through those cycles and make sure that the business actually survives and move forward in trading. Of course, each of those elements in that cycle has got really detailed considerations to back what you can address and how you can resolve them. But we won't be focusing on that too much now, because we can perhaps move on to talking about levels of distress. And I think this is quite an important distinction that I'll offer you now. So if nothing else, this is something to concentrate on, because it just offers us some framework to understand how this decision-making that we can come to in the third point is influenced by the level of distress. So we really have to understand what the level of distress is that the business is under. And this is the Regen's, Dave de Villiers is from Regen. This is the framework that they developed. So, sort of on that graph, don't worry that if you can't see it, we'll go into detail, more detail just now. But the first is that blue area, which is kind of performance enhancement. So I get the sense from a lot of people in the room that their businesses, even if they say it's under stress a bit, that it would be in that category, that there's scope for performance enhancement. But it's very different if you are a bit more severely affected and you need to kind of do a turnaround. It's not only about tweaking, it's actually about making significant changes, but still in an informal way, which is different from when you go into compromise, where actually the courts start getting involved. And of course, business rescue, now for the past, I think, 10 or 14 years, changes in the laws now that's dealt with, but a really regulated way. And of course, if a business has got no hope there on the right, it's critical, then it's a wind down or a liquidation, sort of. So, but what are these? Let's just take them step by step, sort of in a bit more detail. So performance enhancement. When is it suitable to focus on performance enhancement as opposed to the others that are sitting further down to the right? Sort of. So early detection, if you see decline in profitability, decrease in market share, there's some cash flow issues that are emerging. Clearly, there's some indications that there are problems in the business, and since most of us are in the financial sector, we fortunate that we can have the financial indicators to quickly identify those at the early stage, so that we can optimize results through looking at things like efficiencies and productivity, making some changes and tweaking a bit. So this is not a radical shift, but it's just tweaking what one does. So those assessments are things that Div will cover in the workshop that we have on the 30th of July, end of the month. It's an afternoon workshop, so it's not too long, but it applies these kind of thinkings to the practicalities of each situation. But if we move on and we say that it's actually a bit more severe, it's still early stage distress. It's sort of, we kind of see things around debt specifically that's building up. The business is not able to pay its VAT. All of those kind of tricks that the businesses start to play, to use the receiver of revenue as a bank, as a lender, rather than as a place where they actually deposit the VAT that they collected on behalf of the receiver, or the bargaining council. Sort of, we got to start see these things. So it's still very early stage, but the business is struggling in some way or the other. So yeah, but it's quite fundamental in that it's not just going to disappear by tweaking things. So it could be decline in sales and so on too, or something new happened in the market and the business is not able to shift quickly enough. So when you have bad debt, of course, those are commitments that you have to meet. So it means some kind of out of court settlement, some kind of approach to negotiation with those parties to make sure that the business can continue. But there's no formality around it in terms of going to the courts and so on, which is very different from the medium distress level, where you actually end up putting a proposal to the High Court to confirm in terms of restructuring. So this is getting serious stuff. It's not the business rescue, which is the next step yet, but it's kind of medium distress, and you can reach compromise fairly quickly between the company and its creditors. So this compared to going into the high distress, where the symptoms are much more severe, and it's consistent, and it's clear that there's something radically wrong in terms of the way the business is functioning, and that some reprieve will be needed and confirmed by the courts. And there's a whole industry that evolved, and I'm sure many of us in the room are perhaps involved in business rescue in one way or the other, and helping those businesses then to determine whether they can continue after such a rescue process. Of course, the courts have to decide whether that's achievable too through what is submitted by the business rescue practitioners, and that's a highly regulated process. And then, of course, there's one left, which is so critical that it's clear nothing is going to succeed, and you actually have to wind down the business. And that's the liquidation process is allowed for in the Acts very clearly. So this is kind of like a framework that I hope, I'm not sure if there are questions around that we can maybe address, but it's kind of a framework that is really useful in coming up with the right kind of solution for the right level of distress.
Thank you, Christoff. No, Facebook is actually quiet at the moment, but I think they just got a little lag, so they'll probably start saying and sharing some thoughts. But let's see, let's put this on the chat and have a conversation around the topic, the question you have, right?
Yes, we can do that.
And really it is about which challenges are you facing that is causing your business distress?
Perhaps, Thobeka, we can make it a bit wider, since there's so many people in the room that are saying our businesses are in fact good, but it's maybe our clients that are struggling. So maybe we can expand that question onto your clients too, the challenges that your clients are facing.
Yeah, which challenges are your clients facing? Yeah.
So we've got the text chat there. The text chat in Zoom is available for giving some ideas. Christopher Roth says clients are under stress, affecting payments to us. So that's the way that your business is affected, but maybe also your clients. Why are your clients under stress?
Yeah.
And loss of turnover, especially Alwyn says the restaurant businesses, saying the hospitality industry, that's a really difficult industry now. So that Perseverance Tavern, which I used to go to, I'm not that frequent visitor of it nowadays anymore, but I used to go there quite often because it was around the corner where I lived. The oldest pub in the country is closing. So clearly, we have some things happening that's very unusual.
Yes, that's a whole other conversation.
Well, I can do 8 weeks of dryness is maybe good for my health too. So.
I don't know if any of our colleagues have some thoughts on any questions or chats that have kind of sprung out to them, or anything they want to elaborate on what Christoff has just shared. Faith, if you have anything, please feel free. I can see your videos on and you can unmute yourself. But also I just want to welcome Ooosthuysen and Philip. Welcome, gentlemen. Please feel free to come in and say something or comment in the Q&A section. Okay, great. Yeah,
thank you, Thobeka. I just want to really echo what Christoff is saying, because I think if one is looking at some of the symptoms, there was a question on Q&A, which is what is the role of landlords? in this time when, because there were promises from the government that you could get relief from your landlords during this time of lockdown, for example, or during this time of COVID-19. But what I just want to indicate is that it actually becomes important in periods such as these that you actually have control over your cash flow. Christoff mentioned that sometimes in this distressing time, you may be tempted to take what is supposed to be paid over to third party, and you kind of keep that. For example, you have collected VAT that should have been paid over to SARS, and you're now using it for your cash flow. While SARS has given some form, or National Treasury really has given some form of relief where you can hold back on PAYE, for example, you can hold up to, is it 35% of your PAYE, but what we need to remember is that that is something that you still need to pay. So whatever you try and do to meet your immediate challenges, you need to look at the long-term effect of that, because you might be holding back those amounts that you need to be paying over. And that is going to catch up with you fairly soon. And it might really cripple your business at the time when everyone is now really, COVID is over, everything has been opened. But because of your actions, whilst you were not tightly controlling your cash flow, you then find that you are in a worse off situation once this whole period is over. So that's just a warning to our businesses that whilst we're trying to keep our heads above the water, let's also just be conscious that it's not, you cannot be utilizing what is not rightfully to be utilized for something just to make up for the time that you are in. Thanks, Thobeka.
So in short, there's no shortcuts. There's no like, let me play the game because it will catch up. That's what you're saying. And I think
Yes.
there might be businesses that are doing well, that think, okay, let me enjoy or milk this situation, right? I don't know, but
Great. So Thobeka, I see there's quite a few comments coming through, Kumbutso, saying that the challenge of keeping control of your bookkeeping service fees to meet the standard price. So there's a, in our industry, in accounting services, the pricing is getting under pressure. And so one of the things that I know that Dev is covering in the workshop on the 13th of July is about pricing and whether you should be dropping your prices or not. So I'm not an expert on that front, but he's got a tool, in fact, that he uses to show that if you discount your price, if you go, you should rather add value than discount too much. But in any case, that's maybe a discussion for that point in time. So I'm not sure. I would love us to get more to some of the questions too. So shall I present the other 2 points, 3 and 4, and then we can see how much time we've got left to address some of the questions. We've got 4 or 5 questions there waiting for us.
yes, yeah, I think we should do that. Go ahead.
Okay, so if we have a look, then we spoke about why businesses are under stress and those levels of the stress and the appropriate channel to follow. That appropriate channel is determined by a decision-making process, and this is in fact kind of the important part of what we want to show you here today. Is that for those different options, those channels that we saw in the previous graph there, you can follow a decision-making process when you realize the business is in distress. Now that may be a situation of insolvency or a business that is solvent, we don't have to necessarily think about solvency and insolvency as the technical terms around what happens in accounts, but the practicality of cash flow is perhaps the first thing that especially medium and small businesses are feeling, and whether they can continue or not. So clearly, when a business is insolvent, there's only one route, and that's towards liquidation. The laws are clear on that. The responsible thing is to stop trading and to liquidate according to the 1973 Companies Act. There are professionals. If you're not a professional on top of that kind of process, there are professionals that do so. very few liquidations end up in any money being left, but there may even be money left that can be distributed to the owners if that is the case. Now, the solvent is more intriguing because the options there are much more. So of course, as I mentioned earlier, sometimes, especially if you see that the market is not going to shift much going into the future, it's kind of a projection into the future. So you're still solvent, there are problems, and you see, but listen, the situation isn't really going to be resolving itself very soon in terms of the current business. It may be best to actually stop trading and wind up the business, and there's also that's also well catered for in terms of the Companies Act. That may allow a business to entrepreneur to then start a new business because they still have energy and resources to do something new soon. They may use it as a pause to refocus their attention onto something else. It may in fact also be most beneficial to other parties too, you know, sort of. So even the suppliers, you know, sort of, that may otherwise have had bad debt to deal with, you know, sort of, it may be in their benefit too. So to have that overall view of stop trading is quite important. But continuing trading, there are three options there that we can talk about here now. So in the most severe situation where there's a possibility of turnaround and you can go through that formal business rescue process. We must note though that business rescue is quite an expensive process too. So for smaller businesses, this may in fact not be the best solution or an option at all. But that can lead, business rescue can result in returning to solvency and trading into the future, or it can lead to wind up if the business rescue was unsuccessful. And in all of that processes, the decision-making relies on the information that we can gather and the support we can give, or the support that the decision makers, the directors of companies or the owners of companies can get from people that may be experts in those different fields. The top two are quite interesting, and I think it looks like a lot of businesses nowadays are in that space. So it's either continuing trading and to actually record some compromises. There's a section in the Act that actually provides for that at the High Court, and that becomes kind of an announcement of the court, a decree of the court, or it can just stay informal and the restructuring may happen informally. And that may in fact be the process that is most common, you know, sort of. So if we can just look at that one and a bit more carefully quickly, because I think it may relate to a lot of people in the room, and we can maybe learn something from just thinking through this quickly. So the business still is on the books, and in reality there's still enough cash flow to keep going, but they're clear they need to do something, otherwise it's not going to be the case in the future. So 3 or 6 months down the line, we're going to be bust if we don't do something to shift the way that we operate. And they kind of two, you know, either increase certain things or decrease other things that forms kind of the headline thinking in terms of the decision making. So I'm not putting myself out as an expert here in all of these fields, you know, sort of, but I work with businesses day to day, and I can see that there's lots of scope, especially in businesses that have been operating for a while in a situation where it's not been too difficult, or where there's kind of like organized around the culture of individuals, you know, sort of to look at these kind of considerations and say, what are the things that we must stop doing, you know, sort of. So, you know, we may have the way that we organize things are kind of old and we're not using the right tools, and therefore our production costs are too high. You know, sort of we've grown accustomed to certain things, and our overheads are just kind of out of proportion, you know, sort of. So it's sometimes difficult, and it means that you have to sacrifice certain things, certain comforts, you know, sort of. But if you can cut deep and quickly into overheads, it can turn a business that's really struggling into a business that's kind of breaking even or even making money. So to look at those things and say, what is it that we can do in that context? And then on the other hand, so for time's sake, I'll just move on to effectiveness and efficiency on the left-hand side. So, by the way, if you hear laughing in the background, it's this kind of clear home work situation here too, you know, sort of where the computer game console is just around the corner. So apologies for that. But effectiveness and efficiency are two things that a lot of businesses don't necessarily consider as important when it's going well. You know, sort of, why should we bother? But when there's a crisis, people are forced to look at it. So even if that crisis means that you stop for a while and it's going to start again, it may be a really good opportunity to look at those things and say, what can we do differently? What can we increase on? And because it's kind of like a crisis situation, people's attention is on that, and they're much more willing to make changes. So the sacrifices that they needed to make in other contexts that they wouldn't have made, they're prepared to make now. So if you are a leader in an organization, or you're supporting business decision makers, to use the externally enforced crisis to sort out the internal stuff of the business is an absolutely golden opportunity to pursue. So that's kind of restructuring, kind of in a nutshell. Of course, there's much more to consider. And of course, there's kind of a process when you go through restructuring that you need to go through. And we can't go into the detail here now, but, you know, sort of course, you first need to analyze and then come up with a plan or a strategy that you can implement and then monitor how you go along. But in the analysis, as a starting point, you know, sort of to look at those three things, you know, sort of the value platform, and to be able to identify how you can actually quantify that value platform for what you offer, you know, sort of. So what is it? How do you count your capacity to produce value, to create value, you know, sort of. So if you, I know, you can take the example of any industry and then apply it in that industry, you know, sort of. If you are an accountant, it is the number of hours that you can spend with a client, you know, sort of. That's it. You can't spend more hours. But then when it comes to profit drivers, of course, there's certain kinds of services that are more profitable than others. And yeah, in terms of cost leaders, the same thing, you know, sort of. You can try to do less of those cost leaders and more of the profit drivers. And then in terms of strategy too, you know, sort of, can you differentiate yourself? Can you be a leader in the industry, or do you need to focus on a small niche? You know, those kind of questions are what you would ask yourself when you go into strategy. And then for implementation, you know, sort of to be setting the goals and measuring the impact, so that when it comes to monitoring, it's easy to say, what are the short-term successes that you are going for, and to actually measure that so that you get feedback and see if you need to adjust. So this is kind of like thoughts around restructuring. I'm sure for most of us in the room, this is not kind of new. But in any case, I just want to come to the last point, and I think time-wise, I'm not sure how we're doing time-wise. It is running away with us, yeah. So let me quickly go. Let me quickly, I'll just quickly talk about reinvention, because when it comes to finding new ways, if we can find a model like this, we can use this business model canvas as a way, as a reference to say what are the most important things that we need to look at. There are, of course, also other tools that you can use in terms of investigating where you need to make changes. But, you know, sort of in a situation like this, it may be that we use this framework to say, how can we do things differently? So for instance, if you take this one in the middle, value proposition, you know, sort of that little wrapped gift. So what do we base our value proposition on? You know, sort of, now value proposition may sound, you know, we use these words quite easily, but value proposition is in fact just kind of that ability that you have to resolve a need or a want, or to address something that is of value to other people, you know, sort of. And a lot of that, especially in smaller and medium-sized businesses, has to do with the leaders in that business, the owners of the business, the entrepreneurs. And if we work with them to actually ask that question, you know, sort of, what is the value that you as an individual can create better than anyone else, and to move from that. So it kind of becomes a time also for the leaders in businesses to think a bit deeper about that core value that they can be creating. And it's maybe something slightly different from what they've done in the past. But we can go through each of these different, you know, sort of, so the customer segments, for instance, we can explore new ways of delivering different products to our existing customers, or we can look at new segments of customers and find how we can refine what we offer for them. Or if it comes to the value proposition, as I said, you know, sort of how we can create something new that we didn't do before. All of that, of course, considering that in a business under distress, you want to create cash flow as quickly as possible. So as I said earlier, you know, sort of these 4 things are things that we explore in a bit more depth in the workshop that I spoke about. And if possible, I would love to see that many of us in the room here today are able to come to that workshop. Of course, not all. But yeah, Thobeka, so I'll stop the screen share if I can find the right button.
Wonderful. Thank you, Christoff. I just sent a couple of questions that some people have shared from Facebook. And I'm wondering if Rashid or Sfiso or Philip, Liana and Faith from would like to respond to any of the questions I've put to them that I've taken from Facebook, since not all of us have access to Facebook. And I don't know if Rashid, can I ask you to respond?
Myself to be. Yes, Thobeka, I think what happens is, I think the business models normally under that businesses use is that we need to be customer centric and focus on servicing customers. But we have never included our clients as part of our core business drivers other than generating revenue. And the moment we start looking at a business model that incorporates the customers as part of our processes, because our customers generate the cash for us, and see them as part of our value chain, then I think we'll have a totally different perspective of how to manage and deal with customers as stakeholders. So I think we must stop putting our customers in our output outcomes category, but incorporate them also into our processes and our inputs to ensure the sustainability of the business. And in that case, we need to look at our customers or clients as part of our entire circular economic cycle, rather than seeing them as a consequence or output of our particular business model.
Okay, all right. Love that. Yes, my Faith?
Yes, just one question that is coming up on the municipalities and government departments not making payments as soon, in fact, not being operational, which then delays the payments. And I think if one is listening to the president carefully, and every time he is emphasizing the importance of keeping businesses afloat. So I think what you will need to do, if you have got, because the 30-day rule applies, I mean, municipalities, government departments, they have to pay their creditors within 30 days. And if you are not getting joy with that, raise it with the minister concerned. So you can start at a provincial level, and if you are not getting joy out of that, you then have to escalate it to the national level. The Minister of Small Businesses has actually also put her name out to say if small businesses are having issues, they can approach her office and she will fight for the small businesses amongst obviously her peers within government to ensure that they actually are paying their debts as soon as they come due. Because again, I mean, that is one of the crippling effects for the small businesses, that they are not being paid when they are supposed to be paid. The other question that came is, who do you pay first, wages or SARS during the lockdown? Obviously, I think one needs, which I spoke about earlier, that you look at your cash flow situation. Your SARS, if we're talking VAT, whenever you are collecting VAT, that VAT has to be paid over within, depending on what method you are on. So you will, in 2 months, you have to pay that VAT over. And the more you keep it, the more interest and penalties it is going to accrue. So you need to tightly control your cash flow. You need to tightly manage what we call management accounts. You need to be very careful on that so that you are able to pay your debts when they are due. Salaries, it's not negotiable. When salaries and wages have to be paid, unfortunately, they do have to be paid. I think the last couple of months, we had a bit of relief for those that were not back at work, where we had the TERS system with all its nightmares, but at least you had some form of relief that was coming through from the Department of Labor. But most important fact, do your cash flow, manage your cash flow, manage your accounts, then you will be able to know if you have got sufficient funds to make do and pay your debts as they become due. Thanks, Thobeka.
Thank you.
Thobeka,
Thank you.
can I
Go ahead. Yes,
Can
Rashid,
I
go
just
ahead.
add on what? Can I add on what Faith is saying? And I think what's happening is that for small businesses, I think cash management and cash flow management is becoming more and more important in terms of accounting. So cash management is an aspect of management. It does not necessarily reflect into your accounting records. And I think small businesses need to realize that if I manage my cash properly, I can sustain my business and my financial results will reflect on how I manage my cash. And I think that is what Faith is trying to emphasize, is to say that small businesses must not say that I am selling goods, but my cash comes in a month later. They need to say, I'm selling goods, and how quick am I managing my cash to sustain that month that I will not receive the money? And therefore, I'll be able to manage my payments much more effectively. But I also think what Faith spoke about in terms of what the Minister of Small Business Development has stated is that in terms of the PFMA, the government authorities are compelled to pay within 30 days. And if they do not compel to do so, it will be a significant audit finding on their set of financial statements. So, but it also, the SMEs must also make sure that when they submit their invoices, that it meets the necessary requirements in terms of proper documentation, etc., together within the specified due dates. So that's part of cash management. If I know that my invoices must be in by the 22nd to be paid within 30 days, then I need to do that as part of my management responsibility to ensure that my business can sustain itself.
Sure. So much is going through my mind, because what you're saying, Rashid, is like our behaviors that we did before COVID need to also, if we had bad habits as business owners of invoicing badly and everything, and this time it's coming up for ourselves, right? We have to quickly behave fast, because it's not as easy anymore to have income into your business. Yeah?
I agree with you. And I think the other part also is where Faith spoke about, who do I pay first? I think it's important, as Christoff says, businesses need to understand what drives their business. What are their business drivers and what are their cost drivers? And also now the third one is, what are our cash drivers and our, what I normally say, our cash suckers? And once we got those three items and we can manage those three, then we will be able to say, irrespective of my business size, I will be able to sustain myself and I will be continuing to be around as a going concern.
Sure. Thank you. Thank you. I don't want to be a cash sucker, but on the next, on the next point, just to let you all know. So thank you so much for being on the step one of our next steps, which is really about these webinars. And really the webinar is a taste and opportunity to ask yourselves questions, to figure out where you are at, what's going, what's not going. So it's like a personal business audit. And then say, okay, you know what? I need step two, which is the workshop. So of course we have some workshop which goes in more detail of what the webinar is about. Christoff spoke about that very briefly. And then from there we have courses that we run, from anything from pivoting your business. Yes, I can go on forever. So step two, these workshops are half day. They're very practical workshops, and it really applies solid decision making to your own situation. So you look at your situation and you make a decision around that. It's not just all up in the air of theory and no practical outcome. And as well, so it allows you to do an assessment at the end of the half-day workshop. If you need attention to specific items, join an intensive course, which is then, of course, the next step. And this is more about customized support of your project, dedicating assessment and rescue or coming up with a plan. And really, this is a great opportunity for you all. And we have an awesome deal because we do know that, of course, during COVID, as we spoke, our income, our revenue is very minimal. So Christoff, what happens if could I do any of these? What's the offer for us today?
Yeah, so because of the bargaining council that SAIPA has got, and the reach it has with the audience that we have here today. If you want to participate in the workshop, we can give you a 50% discount. Normally it's about 600 Rand, so it's about 300 Rand. And but then we would like to fill that room quickly with orders. So if it's there's a coupon that I'll tell you about just now. But before I get there, so and thanks SAIPA for making this possible. So Div de Villiers is the facilitator of the workshop. I should have had the quotes of what people said after the previous workshop, but basically saying this is heavy stuff that we need to get our heads around, but it's practical, sort of. So if we understand that we must support others and maybe even for our own businesses, get to the practical side of it. So we need to analyze our own industry and our own situation. And we can do so by using certain tools. So in the workshop, Div introduces you to some tools and testing of business viability, even for scenarios going into the future. So these maybe stepping a bit outside of the traditional SAIPA kind of accounting practice focus into, but we're all out there, and our clients are asking us, sort of how do we go about in doing these things? So we can't run away from supporting them in that. But yeah, so by the end of it, to be able to kind of use the decision-making process that they will introduce to you in a practical context is the outcome of that afternoon spent. It's online, of course. And if you go to this address, and I'll just kind of get hold of the address now here and paste it into the text chat of both Facebook and on Zoom. If you click on that address, it will take you to a page where you can actually activate that 50% discount by using the promotion code SAIPA 50. So SAIPA in capitals 50, and that will give you the ability to do the checkout there. I must just remember to put it into Facebook too. I nearly forgot that.
I'll do that now for you. Don't worry. Go ahead. I've done it.
So that SAIPA.stayinbusiness.support address, if you click on that, it will take you to, you can book your seat there. I'm not sure what the response rate is going to be, but if it's yours, you may find that all the seats are taken, but I don't know how many people will respond, so we'll see how that works out. And then if you do battle a bit with that process or not, so you haven't used a tool like Quicket, which is the platform through which you can buy a ticket, you can, help is always available. We'll give you our email addresses and so on just now, but you can also go to that address to get help. And I'm pasting that in right now. It's just the instructions in terms of how you need to do it. Please note that you need to use that code SAIPA 50. And don't use the code that's in the example. I'm also just typing that out so you have that in front of you, and on both platforms, both Facebook and on Zoom. Okay, so Thobeka, I mean, we can maybe spend the rest of the time in addressing some of the questions and get our colleagues from SAIPA to also comment on things.
Yes,
but that's the offer basically, and it's really applying. And I must say, I've worked with it a bit, sort of this really great value. So while we spoke about email addresses and so on, maybe we can just share that too. If you do want to reach out, you can go to info@-epi.org. That stayinbusiness.support is the website that's got a bit more details about what Thobeka spoke about earlier on. But perhaps there are some more questions and so on. So I would love to hear.
Wants to tackle. I think Faith wants to say something. Go ahead, Ma.
Thanks, Thobeka. I just want to confirm, your half-day practical workshops, are those face-to-face or are they virtual workshops, especially during this time of lockdown?
They're virtual.
They're virtual. Okay.
They're virtual, yes.
So
Yes,
they
they're
will
virtual.
It is a classroom.
Is it
We must
4
explain
hours?
it is
Go
a
ahead,
classroom.
Chris.
It is a classroom. It's not like you sign into a pre-recorded, sort of a pre-packaged course. It's a classroom. It's a 3 hour. It goes on sometimes till 4 hours, but it's supposed to be a 3 hour. It's packaged for a 3 hour afternoon workshop, and the next one is on the 30th of July.
Okay.
And of course, there's a little stretch or break thing there, so it's not just like exhausting and screen time. But yes, go ahead, Rashid. You've unmuted.
No.
Oh, okay, nothing.
But I think what's happening is, I think what's happening is that especially businesses in general, and even more so for SMEs, I think that business as usual no longer exists. I think there are 2-3 stuff which businesses need to realize to survive. One is responsiveness to market needs. If you are first in line to respond to market needs, you will be successful. Secondly, is also that businesses need to realize that for me to survive in a rapidly changing world, I need to be adaptable. I need to understand what the market needs are and able to adapt in the quickest possible way to satisfy those needs. And lastly, it all goes about business control. Controlling whatever you do means that you need to understand that every decision I make within my business has a consequence, whether it's favorable or not. I need to understand the consequences and know how I need to use it to put myself into the next cycle.
You've said a lot there, Rashid. And I mean, these points also work at different levels of that enterprise or that business. Very well run commercially, and then you have the SMMEs that are like 1, 2, 3, 4 people. And a lot of times those small ones, to have this, what you're saying, need support structures. They need to have that space to really tackle this point. And I think a lot of times, I wonder the businesses that are on the ground, that are having the challenges, that do not have the connection or the ability to be in these spaces that we're in now, how do we pull those ones to come in? Because those also have an impact of making sure that they have money to make sure the kid goes to school or transport or even pay rent so that their rent is paid so they don't feel stressed. There's nothing more stressful as a small business to not have money because of rent, because that house of yours is also where you work, so there's so many issues around this. And I wish there was also a way for us to see how as accountants, as small micro businesses that can be potential big business and big clients can be helped during this time. But anyway, I think
Shall we tackle this question? It's an anonymous question about how do you keep or control your service fees to meet the standard price fee? If your clients keep coming to you and say, but it's COVID-19, you must give us more and more discounts. So I'm not quite sure if the SAIPA colleagues, they have some thoughts to share there too, but maybe I can kick it off, and I'm also aware that we need to keep people's time, honor people's time, so we are already over the hour, but maybe we can make that the last one, So clearly, maybe I could share this idea. So I'm not offering any accounting service. I'm a business advisor, a mentor, a coach. So it's a bit different, but similar, but a bit different. So when businesses are getting to the point where they say, but I can't afford, I need to have the service, but I can't afford to have it, and your response to that, so you can drop your price, and see how that affects your business, probably you can drop it to the point where your business itself is going to become unfeasible. Or you can have a response where you say, okay, let's look at how the shifts in needs are are being accommodated, and where are the gaps for that, sort of. So clearly there's a compliance issue for businesses in accounting services and so on, but there's also a business development area. And how can you, so that's the challenge that I'll put out into this audience here, sort of how can you empower yourself better so that when businesses come to you with this kind of, so we are struggling with our sales and so on, that there's not just, oh, it's affecting my business response, but also how can we help you in finding the right answers so that you can unlock new revenue or that you can shift your business into a different space. So the challenge is then turned into how do we change our service offering a bit so that we can actually then charge them for something different that they otherwise would have gone somewhere else, but do it in such a way that it's professionally stable and justifiable. So not to put yourself out for an expert in something that you're not, but rather perhaps connect someone with an expert and earn your fees in that way. So those are the kind of thoughts that come to my mind when you ask that question. But I would be interested from Faith and Leanna and Rashid and then to Philip to hear what their thoughts are on how we can deal with people that are claiming COVID-19 is preventing them from paying their normal fees.
Okay,
Can I
quickly before I allow, sorry, folks. Literally, you have a minute each.
Yeah,
Between Faith, Mama Faith and Rashid Small, and then we'll have to end.
Yeah, I think what's important, as Christoff has just said, is that you need to have a strategy. If they are coming to you asking for discounted prices, how can you use that to your benefit? So is that going to generate more clients for you? If so, use that as a bait. So you give them the discount they're asking for because it's going to be calling you more clients. But otherwise, you mustn't sell your services short. You must never sell your services short. We want to be sympathetic to the situation, but if it is not going to be worth our while, do not do it. And I must also make this my final. Thank you so much, Christoff, Thobeka, everyone that joined in, Prof, and Liana and Philip, thank you for joining.
Thank you, Mafe. Go ahead, Rashid. Okay, Prof.
For me, KYC pushes VP. Know your client, know what makes your client function, then it will push value pricing rather than time-based pricing or market pricing. Sell value, charge value, and contribute to your client's business chain, value chain. That's all I'll say.